Hello and welcome to Building the Premier Accounting Firm. This is a podcast dedicated to helping individuals have a successful accounting, bookkeeping, tax business. As such, we're intent to actually give you the information you need to confidently and competently offer quality accounting services and get paid what you're worth. I'm your host, Roger Connect, president of Universal Accounting Center, and for more than 20 years, I've been working with accounting professionals to help them both start and build the premier accounting firms in their area, and my intent is to help you do the same. Now, as a show, we actually cover a variety of topics. We'll touch on things such as marketing, pricing. We'll address things such as services to provide, things that you can be doing to actually build client relations, onboard your clients effectively, help actually service their needs, all the things necessary for you, in fact, to actually have the premier accounting firm in your area. Today, we have an excellent guest, someone that I'm sure you're going to enjoy. It's Adam Farnsworth, CPA. Adam happens to actually be working as a CPA since 2015. Now, after having completed his master's degree at the University of Utah and his undergraduate degree at Colorado State University, he then founded Leaf Specialty Tax Consultants. He has built a team that saves companies millions of dollars annually by identifying tax credit savings. Now, Leaf Specialty Tax Consultants was born after Adam actually saw a need for businesses to have a better way to access and claim research and development tax credits. Across the United States, companies are using innovative technology and research to actually find ways to better the world. By creating a consulting business for R&D tax credit, Leaf wants to actually provide a way for businesses to have the advantage of a tax expert to provide computation and substantiation guidance surrounding Section 41 of the Internal Revenue Code and affiliated code sections, court cases, regulations, and affiliated state tax credits. So with that being said, Adam, welcome to the show.
Oh, thanks, Roger. I appreciate it. I'm excited to be here.
This is going to be fun. So before we get into the technical side of things, I would like to just explore a little bit of how you got into the accounting profession and why you chose this as a profession to actually pursue. So give us a little bit of a background on yourself.
Sure. So, coming out of undergrad, they really kind of gave you two routes. They said you can go public accounting and try and go Big Four, or you can go industry. If you go public accounting route, they said you got two options. You can go tax or audit. If you're outgoing, go audit. If you're introverted, go on the tax side. And I said, okay, well, I like to talk to people. Let me try that audit stuff. So I went and I worked in audit, and I realized that really wasn't my gig. I didn't enjoy it.
Okay.
I was like, all right, got to find something else. So went and did my graduate work, worked at a small firm, did tax and audit. And I realized I kind of like tax, but a lot of the, plug and chug, getting numbers into the return, I didn't necessarily enjoy that. And so I went and worked in industry, thinking that, doing month-end closes was going to be what I would enjoy. And I'm like, all right, I became an accountant for a reason. What was it now at this point?
Yeah.
And after I got my CPA, I was like, no, really public accounting, I think, is where I want to be. So I went and started getting back in, and I found an R&D consulting group, and I started really understanding what it meant to be an advisor. And, after a couple years of, working in R&D, I just realized that that's really where my passion is helping identify these credits for companies, helping them to improve their innovation. And at the same time, I'm helping CPA firms that don't want to spend the time on it, didn't know how to best help their clients. And so it's kind of been a great opportunity for me to have the best of all worlds. I get to be in tax. I get to use my CPA background. At the same time, I get to learn about all these different companies and not just what their numbers are, but what they do, help give advice, help them succeed. And so that's really been beneficial for me.
So your explanation of your career path, I loved. It was short, succinct, and I think a lot of our listeners can really identify with it because there is a personality assessment that kind of needs to go into this. It's definitely a path between audit and tax, as you were describing. And I liked how you kind of went through an evolutionary process, assuming one path was going to be better than another and needed to adapt. So lots of good nuggets in there. But the one question I want to ask now is, why go out on your own? I mean, there's something different to find your passion, like what you do, and do it for a career. It's another thing to say, I'm going to go start my own business. So what was the thing that caused you to say, I'm going to go out on my own?
Yeah, I mean, that's a great question. we probably don't need to talk to my wife about that one. She'll give you a ton of different theories, and she heard all the thoughts going left and right. But I think really what it came down to for me is I did the big accounting firms. Could have I found one that made the most sense, and could have I stayed and made partner? Maybe. But I think that especially here in the US, I mean, you've got so many firms that are excellent accountants that are smaller firms, right? We're talking people less than 50 employees, even those with less than 150 employees that are excellent firms, but they don't have the same access to specialists as say your big four would.
Okay.
I'm happy with the big four. Don't get me wrong; they do a great job, but they're not focused in on the mom and pop store down the block. They're not focused in on the company that's got $2 million in revenue. They're helping them big fish, and that's okay. It's got its purpose. But where a lot of those firms or a lot of the companies that are using quality CPAs, they're just missing the specialist piece of it. When I worked at a national firm, they had their national tax office, and I was part of it, and they had cost segregation, R&D, they had accounting methods, and they had wealth management. They had all these different areas, and as I started looking at the industry, I just realized 80% plus of firms don't have that same access. They might sign up with an affiliate group. I know RSM has one, and some of these other larger firms kind of have an affiliate group where, hey, you can come use our NTO, but then they're concerned about, are they going to steal my clients? And so for me, when I sat there and I looked at what I want to do is I want to help these firms. I want to help their clients. And there's a good opportunity for me because there's so many that do need help from a specialist that's got their back, and they don't have to look over their shoulder at them. And so that's really where I wanted to be.
Okay, so that's a pretty good explanation as to what's the difference. But I still think the question of why go out on your own, I'd like to dive into that. And you brought up your wife. Obviously, going home and say, hey, hon, I've got this great opportunity. I've got a great idea. Trust me on this. I'm going to make millions. What was her hesitation? What was that like? And what came of it?
I think with any entrepreneur, the idea of leaving the security of a W-2 job is terrifying. But when we sat down and talked, I'm very fortunate to have the most supportive wife in the world. And she basically told me, hey, growing up, I was poor. If we're poor again, I'll be okay. It gave me the utmost confidence that no matter what it took, she was on board. She had my back. She was there to support me. And that gave me the confidence to push forward and go out on my own. Her concerns about would we be taken care of were left out because we had a plan. I took a lot of time to develop my business plan, to look at market opportunities, to identify the right situation and the right time to leave. And so I think that was a big piece. Now, to answer your question about why I left, right?
Uh-huh.
I saw an opportunity. There's all these differences. I like being able to really be in control of my clients and to help them, to control the quality of my work. If I need to spend additional time on something, I'm not as worried about billing hours and profitability. I mean, I want to do it the right way. So I have a very strong ethical work ethic. That's not duplicative. I really have a strong focus on wanting to make sure things are done the right way, whether it takes 2 hours or 10 hours or more. We're gonna do it, and we're gonna do it right.
Yeah.
And I hate having to track hours. So that was another good piece.
Gotcha. So with regards to starting your business, from the moment you started and went out on your own and started doing this, how long did it take for you to actually have that moment of epiphany of, by darn, it's working and I'm actually going to make some money doing this? How long of a time did that take for you?
You want to ask me or my wife? Right?
I'm curious what both of your answers would be then.
So I had everything laid out. I've got a 10-year Excel spreadsheet that maps out how many clients, revenue, expenses, the whole ordeal, right?
Yes. A nice pro forma.
I'm super excited about planning. The
Yes.
goal is just to make sure we stay on it. So in the first 6 months, I really accomplished my annual revenue goal.
Excellent.
And for me, it gave me a little bit of confidence of, hey, this is gonna work. And then I didn't sell anything. I didn't sell any work. I didn't have any good connections. I didn't have a good pipeline for probably another 4 months. And in those 4 months, my confidence was shook. Right? I was like, man, I really thought this was going to happen, and I got off to a great start. Why isn't it just going? And I had to make some changes as a business owner. I sat down with a group that focuses in on business consulting, and we identified kind of the methodology difference that I needed to go into. And so we
Yes.
went through a business change, from going direct to companies, where most of the time they just said, hey, let me check with my CPA, and their CPA didn't want to be the guy that didn't bring it to their clients. And so he said, oh, don't worry about that. Don't do that. Or, oh, we'll already look at that. And that created a lot of issues. And, it didn't present me in a good light to the CPAs. And so what we did is we made an adjustment of working with CPAs on the front end instead of the back end, and just building relationships. I'm not out there to sell CPAs. I'm out there to be a resource. And so I sit down with them, and if I can help, great. Let the CPA bring it to their client, and everybody looks like a winner at that point.
So just to clarify, and I think I've got this correct, your business model initially was approaching businesses directly, selling your tax services with the R&D tax credits.
Yep.
And then what was happening is you were realizing that it was the CPA that was spooked that was already servicing them. So your business model switched to where you're actually now looking at the CPA as your client, as an indirect way to the businesses that you could help.
Absolutely.
I love it.
And so when I started feeling like your aha moment that you were asking about, that really came just a couple months after that. We got a few CPAs as connections that were friends, and
Yep.
we started pulling client after client and multiple a week. And it just got to the point where you're like, yeah, well, why didn't I do that in the first place?
Yep.
But it gave me the confidence, and it gave me the revenue so I could start hiring. And so now I've started to build a team out, and it's just really exciting. We've got multiple people going, and it's just all about relationships. So we maintain that quality, and that was my aha moment.
Perfect.
My wife was much easier to please. Just on the first one that it was, she's like, you did it, you sold one, now you're good to go. And she was happy as a clam. So like I said, I'm very fortunate for her support. That's been the biggest key for me to be able to go entrepreneurial.
Yes. So let's talk a little bit about what you do, just for those that aren't familiar with it. So obviously you're working with the accountant, typically the bookkeeper, the CPA firm that services a business, and you're helping them identify these tax credits, these R&D tax credits. So give us an idea of what types of benefits, or better said, what types of companies benefit from the research and development tax credits, and what do those credits look like?
Yeah. So a quick history on it, just to start. The credit came about back in the 1980s. We were losing a lot of work overseas, a lot of the STEM work. And so Congress put into place this credit, and they said, hey, let's try out R&D, see if it's going to help companies bring work domestic. And so that was really kind of the point at that point. There really wasn't a ton of, we all love the IRS and we all love Congress, but there really wasn't a lot of explanation that they gave us. And so kind of the idea was, are you creating something new? And they had a couple other tests in there, but that was about it. So from an industry perspective, right, companies that can qualify, it's incredibly vast. And there's a ton of opportunity, whether you're in agriculture, whether you're an engineering firm, whether you're a machine shop, if you're in manufacturing, if you're in software, right? There's a whole, all of those industries, there's plenty of opportunity there. And over time, it's the rules have, kind of been clarified a little bit. It's only been 40 years, but at least we're getting somewhere. And, so what the credit means now is, is your company developing a product or process, and is it difficult? Do you have to test it? And does it rely on principles of science, whether it's computer science, engineering, biology, chemistry, those opportunities?
Perfect.
And the value that it brings is pretty significant. Now, I'm in Utah, and each state has different credits, but between the federal and the Utah credits, it can add up to almost 20% of their R&D spend. And when you think about, hey, I hired a couple engineers, I'm spending $100,000, looking at $20,000 in tax credits, it's pretty significant.
Yeah. Now, you mentioned real quickly this 4-part test. You just kind of rattled it off, and I'd like to draw some attention to it. So what are some of those things that the listener needs to understand to at least listen for when possibly considering here's an opportunity to explore maybe benefiting from these R&D tax credits?
Right. So with every R&D piece, the idea comes down to you need to have at least the first thing. You have to have a project, right? So what was the idea of you wanted to do better? How did you want to make your business better? So the first piece of the 4-part test is, are you developing a product or process, or are you improving an existing product or process as it relates to functionality, performance, reliability, significant cost savings, efficiency, durability? That's the first test. So if you think about a machine shop, or you think about those in manufacturing, if you have a manufacturing client, they're always trying to create something new, right?
Yeah.
Or they're trying to improve how they do it. They're improving their processes. They're improving their products. The second test is, do you have technical uncertainty? And if you do, is it a capability uncertainty or a methodology uncertainty? So, for example, if we go back to that manufacturing example, you want to go and you want to improve your machine performance and your process, right? But are you capable of accomplishing the goals that you set forth to become 4 times faster? Is that even realistic? Is it possible? Or what's the best way in which we're going to do it? How do we set up the machines in the right position? How do we, automate X, Y, and Z process versus having it be manual, right? Those are considerations. The third piece is, how are we going to test that uncertainty on whether we accomplished our goals? So did we put that into play? Is it trial and error? Did we use some CAD programming? Right? How do we test the uncertainty to make sure we accomplished our goals?
Okay.
And the last piece is just, is it focused in on the principles of science, right? So again, is it engineering for that manufacturer? Is it, is he developing an app on the software company that's focused in on computer science? So if you're going to qualify the project, that's where we start, is that 4-part test. Then I have to figure out how much it costs. And so we allocate what people's time, so wages, external contractors, and supplies to that project. And that creates this bucket for R&D.
So 2 questions then. Do I have to hit all 4 points, or can I hit 3 of the points to qualify?
The project has to hit all 4 parts,
okay,
in order to qualify.
And does the credit kick in once the project is complete, or can I do this over multiple years?
That's a great question. So oftentimes you have multiple projects that are ongoing, and it's an expense-based credit. So as the expense occurs is when you get credit for it. So if you don't succeed for 4 years, you can claim your time and the expenses each year for 4 years. And then once the project is concluded, then we look at, obviously, what else are you doing? Or we kind of help you every year, help you pick up this credit.
Now, not to throw a wrench into this, but because you brought up the 4-year example, imagine that I start the project and it met all 4 criteria if completed, and I get into it a year or 2 or 3, the expenses are becoming too much, the product that we're wanting to create isn't feasible, or the the science behind it isn't proving to be right, so we scrap it and we don't finish it. But I'm 2 years into this project with that premise. Do I lose those credits? Is that a loss at this point, and I'm no longer qualifying for those? How does that play out?
Yeah, I mean, I think the IRS would be pretty ignorant to think that we're going to be successful in everything that we do.
Uh
We are the great US of A, but we even make mistakes every now and then. Don't let anybody know I said that, right?
huh. It's just recorded. Don't worry about it.
Perfect, right? So, but no, I mean, really what it comes down to is you're not punished for being successful. So if you're successful your first try on a project, that's great. You're not punished for that. But also, if you fail, you're not punished for that either. The intent of the credit is that you try,
Yeah.
that you take the initiative to do something new, to make your product or your process better. So the intent of the credit is all about improvement and advancement. So if you work on this project for a couple of years and it fails, or if you're working on a software or you're working on a product for live events and then COVID happens and you stop doing it, you still spent money trying to improve yourself. So you get the credit for the expenses as they were happening. There's no punishment from a tax credit perspective on that.
Okay. Now, the next question is size. What you're describing can be, hundreds of thousands, millions of dollars. What if it's a smaller business and we're talking like tens of thousands or 100,000? Is it still worth the expense and the time to record and track and document all of this to qualify for that tax credit? Where's that break even point that we need to be looking for?
So for a client to be able to do it, I think that the first year is always the most difficult. The way that the credit works, it's called an incremental credit because it evaluates what you've done in the past versus what you're doing in the current. So the first year, it's always going to be a little bit more expensive to get the analysis done.
Mm-hmm.
And so if you're looking at kind of that first year, you're saying, are they spending over the course of 4 years? Can we reasonably allocate, call it $250,000, $300,000 into this R&D bucket? If so, then it probably makes sense to bring on a specialist to help them to find these costs. For if a CPA is going to do it on their own, then it's more just a matter of time. Assume that to gather this information, it's going to take anywhere from 10 to 20 hours to be able to get the right information, find the right documentation, complete the correct calculation.
Mm-hmm.
And so from a value standpoint, if you don't think that you can really save your client a good chunk of change, then it might not be worth it to dive into yet.
Okay.
The way my team and I have tried to combat some of that uncertainty is we sit down with CPAs on a regular basis and we review their client list with them. And we just go through a free estimate phase of, hey, let's sit down and talk about this client. Let's look at their quick expenses, pull up their tax return. And, oh, yeah, that one might be a yes. It's worth 15 minutes of the client's time to jump on a phone call with us. Or, hey, this one's really small, but if you want to do it yourself, this is probably how you could do it, and it would take you a little bit less time. And so we really try and work with CPAs on their ball court to figure out what makes the most sense for their firm.
I like that. That was a good, simple explanation of how to go through the process of identifying potential candidates or clients that could benefit from this. So I like that. Now, here's the question that the business owners may ask, and why it's probably best that you're working with the accounting firms versus the business, which is the presumption that my CPA, my accountant, is doing this already. My tax preparer is including this as part of the tax planning strategy. Why is that an incorrect presumption?
Yeah, so at least 8 out of 10 CPA firms that I reach out to don't know about this, or they don't have the time to deal with it. And when you think about general tax accountants or bookkeepers, it's not something that is a common piece to pull up, right? We're not thinking about R&D and tax credits and consulting opportunities, a lot of times we are very focused on the task at hand. And again, I worked in this world, so I get it. We've got 20 tax returns we need to push through, and you're really supposed to have it done yesterday. But, the idea is the same as if we can step back and really evaluate the returns or, their monthly financials and say, how can I help save them money? I realize that this client is, very profitable and they weren't last year. Like maybe they need to save some money. Then that's when, we can really start helping out and helping the business owner.
Yeah.
But the business owner doesn't know that the CPAs, the bookkeepers, they're just busy. The consulting is not always what they pay for when they're paying to get their return done for a few $100.
Yeah. Now, what I think is really important here is the fact that this is tax planning. It's not tax preparation. If you're at the tax preparation stage, there's just too much work going on and stuff that needed to have happened prior, that really this isn't at the tax preparation level. The tax planning, if the accounting firm, CPA firm, the tax business is actually more in the planning focus, this is a great thing to be doing throughout the year with the clients to help with client retention, to help client engagement, and most importantly, realize those benefits. But here's a question that I want to ask is, does this actually increase the audit potential of a client?
Yeah, that was really a big question, and that's one I've gotten a lot. So if we go back historically, you look at, it was a temporary credit from its inception until 2015 during the PATH Act. And during that time, because there was so much uncertainty, it got labeled as a tier 1 audit issue. And so especially for big businesses, if you had R&D on your return, it was more likely than not that you could expect an audit, relating to your R&D credit.
Uh-huh.
People didn't know as much about how to do it. They also had what was called a discovery test. And so companies had to really be improving the industry or the world. And once the discovery test went away, it opened up the door for small businesses where you have to be improving your business. You don't have to improve the industry. If you're trying to build something to catch up with a competitor, because the competitor has it doesn't mean you're not doing R&D. And so it opened up the door. So from an audit perspective, that made it a little bit easier. And then in 2012, when they got rid of the tiered structure, right, R&D became even less of an issue, as a temporary credit that was tier 1. Now it's just a temporary credit. We no longer have the discovery test. 2015, we have the PATH Act, which makes it a permanent credit. So we have this year over year. We know it. Really, the audit risk is such diminished from what it used to be that it's really on par with, just adding any other sort of, benefit on the return, or adding a Schedule C, or, doing something like that. It's no longer a faux pas, if you will.
Mm-hmm. Now, realizing that that's definitely been diminished, there's still this subjectiveness to whether or not I'm qualifying. I realize we talked about the 4-part test earlier, but let me just give you an example. A good core part of our business that I run and operate happens to be educational. We're technically a post-secondary school. We're providing curriculum, and so there's this new product that we will develop. It's a new curriculum, new training materials, videos, curriculum, testing, and so forth. So there's a lot of research and development in preparing that curriculum. There's a lot of time and energy put into producing the associated video and manuals. There's a lot of time creating the exam and testing that's needed to actually complete that student experience. But, it's not scientific. It's not like it's based on biology. It's not based on engineering per se. So when a post-secondary school is looking at building a curriculum, how does that subjectively meet those 4-part tests?
So we definitely have to separate out what pieces of that are really computer science, hard sciences, technical based,
Yep.
and how much of that is psychological based. What is going to be best for the student, and how are they going to learn most effectively?
Mm-hmm.
Is that social? Is that psychological? Right? Those are excluded components. But if you have pieces of it that are, again, in the hard science component, so looking at if you're developing a software base or a SaaS platform as a post-secondary education,
Uh-huh.
then the technical and the programming time that you guys spend in that side of it, we could look at for qualification, but not the psychological side of it. Does that make
It
sense?
does. It does. So let's talk about, here I am, I'm listening to this podcast. I'm realizing that I've got some clients that probably should have qualified for some R&D tax credits in some previous years. What are some of the amending processes to look at going backwards and getting these tax credits? Is that a possibility?
Yeah. So the form that you would look at for R&D is in general is form 6765. And if you're looking at amending, it follows general amendment rules. So typically it's your 3 years prior.
Mm-hmm.
And the credits fall through as a general business credit. And so really from an amending standpoint, that's where it'll go. If you want to amend, I know that depending on the year, they've got the paper file versus the e-file, but you would follow just general amending rules 3 years back.
Very good. No, this is extremely insightful. One of the things that I think a lot of our listeners may really appreciate is two things. One, maybe this is intriguing them that they want to pursue this and get into this realm of service and become the specialists in their areas to provide these services. But more importantly, it's the connection with someone like yourself that maybe they have clients that could benefit from these types of credits, and basically teaming up and paying for your services to service their client might be a viable option. How does that relationship typically work with you?
Well, I love that second option. Obviously, it's always good to put money in the bank.
You're biased.
A little bit. But at the same time, I love helping CPAs understand it, mostly because unless they're willing to make, a business change, and, if they're just doing small returns and they really want to get into the consulting piece of it, most of them are going to end up working with me anyways.
Uh-huh.
But what I tell them is if you want to get started in the game, and if you want to start understanding and start learning, hop on a couple webinars. And there's a book out there. Alex Sadler puts it on. He was an attorney that worked on a lot of R&D cases, and it's called The Legal Guide to Research and Development. You can purchase it from Thomson Reuters, and it's a great academic resource. You definitely be prepared to read a couple thousand pages, but if you're really thinking that this is something that you want to do, going through that technical piece is a great option. And I'm happy to send you the link, Roger, if you want to put it out to,
please,
your listeners.
Yes, I'd love to put that in the episode description. So we'll definitely do that. Here's kind of some off-topic questions. With regards to your business, you obviously went out on your own. You put together this proforma that you're using for your 10-year plan. What I want to do is look back. And in looking back, what advice would you give your younger self as they were considering to start the business and begin this journey, realizing the challenges that you faced along the way and where you are today?
Expect the unexpected.
Okay, give me an example.
I think that, generally in this industry, if you get into accounting, if you get into being an entrepreneur in this space, it's very easy to focus in on the analytical. And, my proforma is very dedicated to the computational, financial piece of it. I think what I didn't place enough emphasis on, and the unexpected piece for me, is building a team and really dedicating the time to understand my employees and understand their needs, and to developing the culture. I had an idea of what I wanted the culture to be. My firm is dedicated to paying higher wages. It's dedicated to working less hours, and we can all say that, but it's really hard to enforce that, or not enforce,
implement,
stick to that culture,
yeah.
Implement. when you're like, well, if we just work a little bit more, we can get more work done. We can make more money. So the unexpected piece for me is that I want my employees to work 30 hours a week and full-time pay, right? A more 40-hour pay, but 30 hours of work. And I do that so that we can enforce a culture of, we are family focused. And so the unexpected piece for me is I have people that want to work more. I have people that want to work 50, 60 hours. And that was just baffling to me, right? I'm offering this great benefit and you don't want to take advantage of it? How does that work? And so I think that, as a business owner, just going back, recognizing that people are going to be different, people have different needs, and to work with them for who they are and what they want is really important.
I love it. There's definitely a culture. As a business owner, we have the opportunity to mold, refine, influence what that culture becomes. It's very much an extension of us, quite honestly. And that culture, generally, you gravitate people that are like you to working in the business, and that's where that loyalty comes. But there are these unique differences that people have as their wants and needs exist in business. So I think you addressed that very well. So here's my next question, and I think you kind of alluded to it in your answer a moment ago, but what has starting and now owning your own business afforded you in life that you really appreciate today?
Man, that is, there's so much that goes into that. You can always talk about the flexibility or the financial, or I think really though what it gives me and is perspective. I know you've got a lot of founders as listeners, and I'm sure they can speak to this at the same time. Until you're in a position of completely running your own firm and having that entrepreneurial mind, you don't understand all the stress, all the work, the weight of the world that's on your shoulders. And, if I were to go back, 15 years and talk to my younger self, that's definitely something that I would have encouraged to do a long time ago, is to go entrepreneurial at a small level as a teenager or whatever it may have been, just to understand that weight, right?
Mm-hmm.
I think it's going to, my own kids, I've got young boys, but I've already started encouraging them about how they're going to start setting up their entrepreneurial business, because it will make me a better employee if I ever want to go that route. And it's going to make me a better owner, and it's going to make me a better person to work with, because I understand what people are going through. I understand what owners of businesses are going through. I understand what CPA firm owners are going through. So perspective is really the big key for me.
Good. I've got one last question, and then we're going to wrap this up. My last question is your boys. What do you hope they learn as they observe you as their father running a business, going to work each day? What are you hoping they're learning about business and work from you?
I want them to know that ethics and treating people right is more important than profitability. I've definitely taken the stance of, as a society, we need to improve. And whether you're Republican, whether you're Democrat, I think we all identify that there's a need to treat people right. And sometimes that comes at a cost, but it all comes to the piece of, I want my boys to know that I work hard every day, that I treat people the right way, and that you can be successful being moral, being ethical, and doing that on a consistent basis. There's no need to cheat the system, if you will.
Excellent. I love that perspective. And you're right. There's much to be said about our reputation or our legacy. And there's people around us that, especially our children, are watching, observing, learning. And hopefully from us, they're getting those right perspectives. It's taken us a lifetime to get them. It'd be nice to think that they can learn them somehow through that observation and not have to repeat some of the mistakes and challenges we've experienced. So great summary of that. Let me go ahead and wrap this up, and I'm going to just do a quick summary of what it is we've been discussing, and then I'll come back to you, Adam, and see what closing thought you might have. But let me begin, first of all, with an offer. One of the things that I have in the episode description happens to be the contact information for Adam. If you'd like to reach out to Adam and find out more about not only his company, but more importantly, his services and how he might be able to complement the things that you're doing with your clients and providing these R&D tax credit possibilities, definitely reach out to Adam. The information for that will exist in the episode description. Likewise, if you would like to become more of a tax professional, in fact, becoming a certified professional tax preparer, someone who actually emphasizes tax planning and preparation services for individuals and businesses, learn more by going to the episode description and see what it is you can do to become a certified professional tax preparer today. Now, with that being said, I'd like to just real quickly do a summary and point out that Adam brought a great perspective as to his career path, getting into not just becoming a CPA, becoming an R&D or research and development tax credit specialist, seeing the opportunity that existed to apply these principles in small businesses and bringing that to the small business community. He shared why he started his business, the support of his lovely wife, but at the same time, the challenges that he faced as he started his business. And he realized, like so many of us do, that sometimes the market approach that we take in marketing and selling isn't exactly the correct one. And he had to adapt after being in business for some time, after having already experienced success, but then all of a sudden, that challenge of that dry period came along and he had to face it. So one of the things that I took from that was obviously that we need to be ready to pivot and change and adapt, and in our business, see where the money or business lies and move towards it. In doing so, he's now working obviously with accounting professionals and providing a great assistance to us to better service our clients. And in doing so, there are these tax opportunities out there. And he gave us some good introduction and understanding of how to qualify for those R&D tax credits with the 4-part test, how it actually isn't going to rise the client necessarily up for an audit, and some things that I think we should know and understand as we're working with our businesses and helping them realize what might exist as a R&D tax credit that they should consider taking. There is obviously an evaluation of whether or not it's worth the time, the research, the documentation to submit and qualify for it. But these are all things that he was able to address for us today. And then lastly, I love what Adam said about the business. It is culture. As you grow your company and you bring on employees, there's definitely the cultural element that you bring to it, what it is you like. And he's definitely building a business that's around family and letting people work fewer hours, but yet get the pay that they would expect. And in doing so, I'm sure he's got some loyal employees. So Adam, with all that being said, what would you like to end with?
You know, Roger, I appreciate you having me on. It's a great opportunity to speak about what we do, and it's great to back up and remind myself of where I've come, what I'm doing now, and why I do it. I just say that for firms that we talk about, that the relationship is it's not a hard sell. I don't need to sell you. I don't need to be there. I'm here as a resource, and I'm here if you need something. CPA firms that I work with, I get questions about, a variety of things. Most of it's R&D, not all of it is, but it's all for the betterment of the client. So if I work with you, if you want to reach out, if it's about the client, if we're about how we can best serve the client, that is my ethical focus for working together.
Perfect. Well, Adam, thank you very much for being on the show. I found this to be enjoyable and very educational, insightful. So thank you for that. I do want to just remind our listeners that we have this episode each and every week. So I encourage you to subscribe to the podcast and get more out of these episodes as we speak with the experts and find out more what we can be doing to, in fact, have the premier accounting firm in our area. Always remember this: if it's about accounting, it is universal. For more information on how you can apply these principles and many others in your business, please visit us at universalaccounting.com or give us a phone call at 801-265-3777. Do take care, have a great day, and be safe out there.